All right, I'm gonna go over a super simple mechanical model that you guys can trade that has a probably I think over an 80% win rate when I was backtesting it. I backtested this last summer. It's been yielding very well and helping me a lot trading at all-time highs because you don't really have much of an external bias on the higher time frame when you're at all-time highs, right? You're obviously going to keep trying longs, keep trying buys, um, and there's no external bias for shorts, right? So if you do see a short setup, I'm going to show you how to basically how to short all-time highs the correct way. No, but also taking longs the correct way. And this is a very easy mechanical model that you guys see me take a lot of the time, and I'm going to simplify it right here. So this requires no higher time frame bias. It is a pretty, how do I say this? Just very pattern type of trade, but it has some sort of liquidity pool in this. So let's go into this. So I'm just gonna draw it out. So for this to be a valid setup, you're gonna want to have a swing low, a swing high, a lower low, and either this lower low or this swing low that's already been taken has to either sweep. So I guess there is some sort of higher time frame bias, but really not. Some sort of higher time frame level, buy side or sell side, right? Let's say you have previous day lows, right? Let's say this is previous day lows that you just took. The market moves how, right? We go from external to internal, internal to external, right? So using that and using also the fact that after we sweep some sort of liquidity, the market needs to what? Rebalance price, right? I say this all the time. After the market sweeps some sort of liquidity, the market has to rebalance, right? So oftentimes when we have this sweep of liquidity, we'll have to rebalance price, and there will always be some sort of unfilled fair value gap, whether that's an unfilled 15-minute, whether that's an unfilled 5-minute, whether that's an unfilled 3-minute, right? So no, this is not a unicorn model, bro. Oh my god, not even close. So any inversion here to then trade here, and then you're going to go break even at whatever PD area this is. You guys always see me and Patrick taking trades, whether that's when that's often towards unfilled fair value gaps. Why is that such an easy drawn liquidity? Well, after we sweep some sort of sell side, also this could be a tap into a higher time frame PD area. It doesn't have to be a sweep of sell side or buy side. If you have a really clear drawn liquidity, this could be a tap into a higher time frame PD area, like a fair value gap, order block, unicorn breaker, whatever. Right? So once we get that, any inversion, and it has to be the highest time frame in this leg to take, you then take it here. You have a stop loss at that low or any order block that we have here. And then you take it to the unfilled fair value gap, and this could easily be either a TP1 if it's a 1-to-1, and then or leave it a runner until it gets to that 1-to-1, and then have break evens, right? So if your draw on liquidity is wrong and your higher time frame bias is wrong, and we're not going to external liquidity, then you just end up getting break even and you end up getting a 1-to-1. Boohoo, you made money, right? If your higher time frame bias is right, yes, I did take something like this during AM. I take this trade all the time. It's a super easy, like if you want to get funded, bro, this is the strat that gets me funded every single time. It's has such a high win rate, and like I'm not saying full port this, but like if you're trying to get funded like fast, like this model here is super mechanical, super easy. Like I don't know, like anyone can do this. Anyone could basically do this. Just super right? So 5-minute, let's say we have an unfilled 3-minute above, okay? That's another take profit. Let's say we have an unfilled 1-minute, whatever. And then you leave a runner to external draws. Let's say your bias is wrong and we end up trading lower. Okay, you get stopped at break even, right? That's that. And as for a bearish example, it's the same exact thing. Swing high, swing low, higher high, and then this higher high or this swing high here has to take some sort of buy side liquidity, whether that's previous day highs, whether that's some sort of, and it always should be like a significant liquidity pool, like AM highs, previous sessions, right? Because if it's just some random swing high that's not on the higher time frame that you can't see on the higher time frame, this has less probability of this working, right? And then any inversion here, highest time frame inversion. Okay. This is your highest time frame inversion to take to an unfilled 5 minute, to take to an unfilled 3 minute, or a 15 minute. Right? So this is simply using what we know in ICT concepts and what ICT always preaches in all of his 2022 mentorship and all of his mentorships, whatever, that the market moves in 3 ways, right? And we use 2 of these ways after hunting liquidity is to rebalance towards inefficiencies, right? Every time after we hunt liquidity, we must rebalance towards inefficiencies, right? So this simple model, it played out, I think, 2 times today, and I'm almost funded now off of this. I think I'm almost done with this. I think let me check. Yeah, $2,000 more until I'm funded. Funded my 5th A. It's gonna be so OP once I can just copy trade 5 accounts, bro. All right, so let's go over it. So this here isn't a good example because there was no inversion. But let's say, for example, there was an inversion, and I did like this just because of this model that I'm teaching. Okay, this was a 2022 model instead, and I didn't use an inversion. Instead, I used a fair value gap, right? But, right, so this was previous day highs, right? So this is a significant, okay, so I guess you do have to use some sort of higher time frame narrative, which was previous day highs, got swept, right? We have this high, low, higher high, lower low. And there is some sort of inversion here, but it wasn't the highest time frame. So this was, I'd say, like a B setup for this model. But we have equal lows here. Super good. Always should also have some sort of equal lows or equal highs in this model for sure. Low resistance liquidity here. And those are good targets for your external draws and for your internal draws. All right, so this was an unfilled 15 minute. And let's say this had an inversion right here. You would have taken this, and then you would have gone break even here. And that's a 1-to-1, and then you get stopped at break even or whatever, right? Obviously, none of these shorts are going to be like you're gambling it if you're trying to catch like a huge move here because we are at all-time highs. So any short here is going to be very low probability, right? So this should. So yeah, let's go to the next one. Also, if there's an SMT, it's even better. Okay, what did we sweep? AM highs, significant liquidity pool. Swing high, swing low. Swing high takes out AM high, significant liquidity pool. We form an SMT in this internal high here. What do we have here? Look at the highest time frame. All right. We have a 3 minute for value gap. Do we have a 4 minute? No. Do we have a 5 minute? No. We have a 5 minute unfilled here. And we also have a 3 minute unfilled here. Okay. And here you can go break even at the 5 minute and then TP at the 3 minute. Okay. Because we need to rebalance price after taking liquidity. Super simple concept, right? Wait for the 3 minutes to get inversed. 3 minute gets inversed. I'm in right here. I'll put my stop loss probably at a closure above or whatever. Or you can be, I think I put it here for like a 1-to-1. And then boom, you get your 1-to-1. And then since your bias is obviously not right because we're at all-time highs, this ends up getting break even. I think there was one more example of this today. What did we sweep? We swept all-time highs, right? All-time highs swept. This is not a significant liquidity pool. I mean, none of these liquidity pools are really significant, I would say, but yeah, whatever. Let's say this had a higher time frame PD array. It always really should be with a higher time frame PD array. Oh, and this was the example from this morning, right? Except we ended up taking the highs, right? What do we do here? It doesn't always have to be a sweep liquidity. It can also be a bounce from a higher time frame PD array. Unfilled. This is a 15-minute. Our bias is bullish. 4 hour. Okay. Low, high, lower, low. You have an unfilled 5-minute right above, right? Unfilled 5-minute. It always has to be also unfilled for value gaps. If the fair value gap has already been traded to and then we have this move, there's no reason for us to go back to this high, right? Because this is simply, this is why I say it's no higher time frame bias, because your bias could be completely wrong and you can still win the trade. And then if your bias is right, then you can catch a huge fucking move. All while being literally break even here while everyone was waiting for the market structure shift, right? Let's say this was the only inversion in this leg right here. Okay, you're in off here. Trade it to the 5-minute, you're break even here. And then look at that. You're just completely chilling, maybe moving your stop loss, and that's that. So this was the 2 p.m. open high, 2 p.m. opens higher. Again, this is all like very bad examples because we are at all-time highs, but you guys can go ahead and backtest this for yourselves. This win rate is stupid. Open high, inversion here, and then wait for a 1-to-1 risk to reward. And there's an unfilled 5-minute right below. And then for external targets, what is it? Equal lows, wherever they were, somewhere here. So yeah, does anyone have any questions on this model? It's just A and D with an inversion and targeting unfilled 50-minute. If the bias is right, then external. Exactly. But yeah, it doesn't have to be like AMD. You would still wait for the highest time for inversion, right? Yeah. An A plus setup would be like this one that we had here. This is an example of an A plus setup with this model. All right. Sweep of significant liquidity pool. We have an SMT at these highs. This would actually be like A minus maybe. If there would be A plus, if there would be a bearish fair value gap above, like a 15-minute. Unfilled 3-minute and unfilled 5-minute. 3-minute is the highest time frame inversion of this leg. We have an SMT at these highs. And then delivers beautifully. But yeah, you guys always see it, me and Patrick, like taking trades till unfilled fair value gaps, and that's usually because of this simple, very simple concept of after we sweep liquidity or bounce from higher time for PD arrays, we need to rebalance it. What was the highest one in the AM trade? I believe y'all took the 10-minute. No. He took the 5-minute. There was a no. Now, I mean, usually you can wait for the 6 and 7 and 8, but I think we had a I think Patrick was really confident in this, so he just went on off the 5-minute. He scaled in on the 5, yeah. I think he scaled in like a contract at the 5, and then once the 8-minute inverse or something, he added more to his position. But yeah. Low-key might do that just for my phone. So basically target higher time for liquidity sweep paired with inversion. Targeting for value ups. Yep. Since these trades are smaller, do you up the contracts to make your risk smaller and the other trades are just no, you can I suggest you all, I mean, especially if you're new to trading, like always risk the same amount on every trade, right? So depending on where your stop loss is, always have that same amount of risk to reward, right? If your stop loss is here, okay, you can put in more size or whatever. But if you're not, and I see a lot of people that don't do that, and a lot of the times you'll see me either trading with higher size on on days with news, and then lower size on days with no news. So you can do that. But yeah, I mean, for now, like don't try to risk more or risk less on certain setups because you really don't know. It could be a screen time thing, but at the end of the day, trading is a game of probability. So let's say this is a 70% win rate. You obviously don't know what 30% are going to lose, right? You're going to know 70% win, okay? You don't know what 30% are going to lose. So why risk more on a certain setup that's the exact same for this mechanical model, for example, if you don't know what's gonna happen? Would you suggest to just TP at the internal if it's not a 1-to-1? Just pass the funded? No. I mean, like at the all-time highs, yeah, just TP at internal. But let's say we get some more structure and, like, let's say this was a beautiful long, right? Let's say the inversion happened here. Your break even here. All right? This is a 1-to-1, right? But what, like, can really pass your fund and what can really get you fucking easy payouts? Oh, 1-to-4 now risk to reward because you let the runner trade towards the external drawn liquidity. Right? So no, I don't suggest going. I suggest taking profits out of 1-to-1, but leaving runners just towards external because you can just catch huge fucking moves because this was just a huge move. All right? This is what makes this model so powerful. Is that you're already break even here. There's no more risk on the table. Yeah. Sorry if you mentioned this is doing something. What inverse do you enter off if there are multiple, although they are your TPs? So if there's multiple, like for example here, there's 1 and 2 for rally gaps. You look at your highest time frame. There's a 2-minute. Okay. Is there a 3-minute? Okay. Is there a 4-minute? No. Is there a 5-minute? No. So you trade the 3-minute. If there's more structure, let it ride. Yeah. How come the other trade you entered on the lower one? What do you mean? Wait, what did you say, Clay? Could you show me where you put standard deviation? Yeah, so for this, your standard deviation could be like this. And your TPs could be at a -1 because if we're in a buy or sell model, whatever, -1 is always where we'll have retracements. So that should always be where you'll go break even. And then -2 to 2.5 of this. I think ICT says to use this as your like the first leg of the breaker, because in the end this is a breaker, right? Because then we're going to trade back to this being a breaker. So yeah, and you're already break even here. You're not waiting for this breaker to see if it's going to hold or not. You're already break even. Or you can use the manipulation leg and then target -2. But the majority of times, if it's a clear breaker, use this. So just an inversion and a PD area with the sweep of sell side liquidity, buy side, targeting unfilled gaps. Yep, that's it. I think he's talking about when you enter in the 1-minute instead of the 2-minute. Oh yeah. No, I mean, bro, I'm on like demo here. It's not like anything. This year I just liked a lot because these fucking lows were super clean. But yeah, this is not A+. You should wait for the 2-minute or the 3-minute or whatever is the highest time frame. And this was just an example. Sorry, this lower one right here, this was an example. This was literally just an example. Like, okay, if let's say there was no for rally gap here, then yeah. But obviously this wasn't valid because the inversion happened and we took the internal high, so you can't take this. I'm going to try this on eval tomorrow and show you the results. Try it for a month. Don't say one day and then come back with me for data. Give me like a week, bro. Bro's saying tomorrow is going to determine if he likes this model or not. Backtest it, bro. Backtest it. You guys will be surprised how high the win rate is. All right, does anyone have any more questions on this model? Are we all good? Got another question? Yeah. Let's backtest tonight. Nah, I'm so tired. Backtest maybe tomorrow. This part's recorded. Yeah, this is a separate recording. Okay. What are the models you backtest? You can look at the recordings. It's just my inversion model. Since we're at all-time highs, it's usual that we keep forming low resistance liquidity on our way up. Not even, yeah, that, and also it's because we're at, it's the day before CPI and FOMC. I really hope that we'll get a fucking dump tomorrow. With CPI and FOMC, if we just keep pumping, I'm obviously not going to trade. But, you know, you can use the model that I was just showing you here. And for everyone that's not coming to charting sessions, I'm not going to alert the model when it happens. Because I just taught it to you right here. And it's super fucking simple. So, yeah, but I'm not going to trade, like, live funds with it, probably. I don't know. I'll see. I really only like taking this model, like, for me personally, when there is some sort of high time frame confluences, because, like, for here, this is what I would have taken on my live account, but obviously we took this. But for all of these, although it plays out, the win rate is obviously lower, right? So using some sort of higher time frame PDRA or having a higher time frame bias, obviously we're bullish here, right? Obviously I'm bullish because this unfilled gap up here, like, there's a lot of reasons for us to go higher. For these, there's no real reasons to go lower, right? But yeah, try it out. But yeah, don't try this. Only really trade this during your macros. So either from 11 to 11:10 macro. Don't trade lunch hour. This is when I took my trade. It was 11 to 11:10 macro. Don't trade lunch hour. 9:30 to 11:10 max. And then use it from 1 to 3 max. Or, like, yeah, 1 to 3. All right. That's that. I'm going to give it a name. What will the name of this be? PB Mech. Blake's PDI? Bro. I was driving my mom. It's all recorded. You can watch it. I just went over it. PB Mech is crazy. I'm just gonna, like, show you guys what, like, an A+ would be though. Most of the time we won't get a 15-minute, but it's low-key PDI a little. It's not at all, bro. All right. So yeah. All right. And all right, so this is a little screenshot that you guys can do. Screenshot this. Oh, wait, don't screenshot it yet. I lied. Give me an SMT up here. There you go. Wait. And also if there's equal lows. Hold up. Don't screenshot it. Stop screenshotting. I'm trying to think what else would make this A+. Let's just put this shit at -2. Alright, so this is like an A+ example, right? I don't think I'm missing anything. There we go. Okay. So, recap. Swing high, swing low, higher high. Highest time frame inversion here, unfilled fair value gaps here. And then take towards equal lows. Those minutes mean the fair value gap time frames. So unfilled fair value gaps. Sweep of liquidity. Nice. Okay. I will pin this in trading chat also. Got to get a name for it though. Yeah, it would be an A. Yeah, I guess an A+ would be an open high into here. You're basically trading the retracement ERL to IRL. Yep, exactly. External, internal. Yeah, it's the retracement, and then if your bias is correct, then we'll obviously have a better delivery. If your bias is wrong, well, you'll still win the trade and you'll get a 1-to-1. Win rate's super high. That's why this model's super good. Do you take these on the fundeds? Yeah, it's pretty much all I take on my fundeds. If your bias is wrong, it's turtle sweep. Yeah, exactly. Bias here is clearly wrong. Because we're at all-time highs and we soup. Bias here is clearly wrong and soup. Also, you cannot have... Alright, so rules. I guess I'll go over rules. Shit. And that's that. I don't think there's any other rules. Not that I can think of right now. Oh yeah, there can't be an SMT. So if there's an SMT here, let's say ES takes it slow, and then the inversion happens, no. Unless you're drawing liquidity super clear, unless there's a very clear higher time frame narrative. If not, then yeah. You'll see me take this sometimes where there will be an SMT here and I won't care about it because there is the higher time frame narrative. But literally simply like mechanical, like zero brain, your dog could do this trade. There can't be an SMT against setup. I'd say against buys. Let me think. yes, you break even here. This is your break even. No SMT against bias. This, what I just said, there can't be an SMT here or there SMT here. Like sometimes I'll be getting in at the inversion, but we don't tap the internal high. We have an SMT. Yeah, then just don't take it. If there's an SMT after it forms, then just close it. Again, unless you have a like this is an A plus example, there's an SMT at like unless you have a super clear draw. But most of the time, honestly, like I don't want to take this off because most of the time, like this is the thing, like SMT. All right, so this is like kind of different, honestly. Now I'm thinking about it, because SMT for value gaps are super like I barely see that happen, and when it does, it's usually NQ that's leading. So ES won't. I don't want to take this off, but I think I am. Because it's different if this is like a liquidity, like if this is like a significant swing low or swing high. But like SMT fair value gaps, and I'm trying to think, like when I was back testing this, I rarely looked at ES. So actually, no, I'm just going to take that off. Because I rarely see SMT fair value gaps. Like, it's just a thing that rarely happens. And I think you're missing out on a lot of trades if there's just a little bit of lag, because there always is going to be a little bit of lag. But whatever, I'll take that off. And then what else? Why are you saying you only take this on eval, you wouldn't take on PA? Because like, all right, so the win rate is really high overall, right? It's a super high win rate strategy. But for me, my risk, like I want, like this is an example of something I would take if we didn't take the internal high, right? This is what I was going to take this morning. I was marking it out and whatever, but we ended up taking internal high. Let's say the fair value gap is here, right? Only with a super high clear drawn liquidity. Nothing of these shorts here was like for me like worth taking on my live funds, because there was no higher time frame bias. And I like sticking to my rules, even though this is a good win rate and I think you could pass stuff on it easily with this. I just prefer like waiting for more A plus for me. Trading live funds. Maybe I'll get an account where I only take this. See how I do. What makes it more plus 8? Like higher time frame narrative. There's higher time frame narrative here. There's no higher time frame narrative for any of these shorts. Right? We're so bullish. We respecting bullish PDRs, we're disrespecting bearish. whole time during AM session, whole time during PM session. So these shorts are very less probability. And then we'll just like go over the actual trade. Okay. This must be an unfilled fair value gap. It can't be traded to already. And it's 5 minute. Three minute as a minimum. 3 minute is the lowest. But you'll often see you'll get the best risk and will take trades most of the time with an unfilled 15 minute because this is the best risk. You're not going to get that good of a risk with a 3 minute. You're not going to get that good of a risk with a 5 minute. It's usually going to be 1-to-1. With unfilled 15 minutes in hourlies and whatever, you're going to have a much higher risk reward and a much better trade. Right? Okay. And it has to be or I don't even know what do you even call this like pattern. I guess must. Okay. All right, that's all the rules, I think. Yeah. Yeah. All right. What's that? It must be an unfilled fair value gap. I'm talking. It has to be the targets. It can't be a 5-minute for alley gap or a 15-minute that we already traded to and then rejected. It has to be unfilled. It has to be unmitigated. Okay. Yeah, I'll pin it right now. I just want a name for it though. What do I name it? Fuck. No, it doesn't have to be previous day high. Yeah, this is just. Wait. Oh wait, shit. Blade? Blake's inversion against the trend. The fucking brain rot model, bro. You have 0 brain. 0 brain if you take this trade. No, I'm joking. I like this a lot. Yo, that's crazy. All right, bro. I'm just gonna name it Blake's model. I'll come up with a name for it tonight. We'll think. This shit B plus model. That's the model. All right, bro. Come up with a name for it after. Fuck the trend model. I think Blake's model just has a lot of aura to it. And I don't think there needs to be much else. You know what I'm saying? Okay. Let's get a nice screenshot. I missed the main move. But you don't miss the main move if you're drawing liquidity is right. That was just 3 horrible examples today. Something random like, yeah, it has to be something random like turtle soup. Like, what the fuck is a turtle soup, bro? I'm gonna do that shit. We're gonna call this like the smoothie inverse. Yeah, something outlandish. No, we gotta make it something, guys. Like, all right, I'm gonna like name it. I'm gonna name it tonight like something insane. Like, so then everyone that didn't come to charting is just gonna be so confused. Like, all right, guys, I think I like this. Yeah, I like Pinda's guitar here. Pinda's guitar, bro. I like Pinda's guitar here. I'm like, what the fuck? Should have came to charting, bro. Should have came to charting. All right. All right, I'm done here.